news here at 4 o'clock. A seismic shift for our economy and relief for millions of Americans across the country. The Federal Reserve cut interest rates for the first time since the start of the pandemic. Thank you for joining us. I'm Dan Haggerty.
And I'm Lena Tillett. The Fed went big, slashing interest rates by 0.5 percentage point. This is an aggressive start to rate reductions in an effort to lower the cost of borrowing for car loans, mortgages, and much more. We have team coverage tonight. 5 on your side's Keely Arthur is in studio with what this all means for your family's finances. First, let's send it over to WRAL's Aaron Thomas in the Live Center with how the markets are responding. They've been up and down, Aaron.
They certainly have, Lena. In fact, everything initially soared throughout the day, but let's give you a real-time view right now at 4 at the closing bell. You're looking at that downward trend of the Dow Jones right at 4 o'clock. But take a look right here at 2 o'clock in the afternoon. Things initially soared in anticipation of this announcement, and that announcement came down right around 2:15. But here we are. Things took a downward trend at 4 o'clock in the afternoon. Keep in mind, this is the first cut that we've seen since the start of the pandemic in March of 2020. This is all efforts to prevent an ongoing recession. Of course, we're told that a lot of this market activity you see is pretty typical on the first day. Could be a completely different scenario tomorrow.
Aaron, thank you so much. Again, a long time coming for so many people waiting for these interest rates to be lowered. And the cut was a bit larger, I should say, than a lot of people anticipated. 5 on your side's Keely Arthur joining us now. You've spent most of the past couple of years talking about the rate increases. This is a nice change.
This is such a nice change, and I want viewers to understand exactly how big of a change this is. So this is September 2019. 5 years ago. You can see it started going way down during the pandemic and then starting to shoot up as we are dealing with inflation. Now that inflation has cooled a little bit, we are starting to see things drop. But I want to be clear, it's not as big of a drop as you might feel in your bottom line.
The negative part is that they're still quite high. The positive is that if you have interest rates that are tied to short-term interest rates, kind of credit card rates or some mortgage rates that are variable rate mortgage, you're going to be paying less almost immediately.
Almost immediately, but by how much? Coming up at 5, I will explain when and where you could feel financial improvements because of this. This is good for people with lots of credit card debt, maybe an adjustable rate loan on their mortgage, private student loans. Not so great, though, for diligent savers.